Are you ready to finish estimating about how much risk you have in the stock market and about how much that will affect your net worth personally? That's what we'll be doing in this video. We're going to keep working right through the handout that you got for this challenge to see about how much risk you have and about how that will affect your net worth so that you are solidly in control of your investments and you don't feel like a victim of the stock market. You don't feel like a victim of your investments. You invest from facts, data, logic. You know where you are, and that keeps us from investing with fear and greed. Hi, I'm Camille Gaines, and in this challenge, what we're doing is estimating about how much risk that we have in stocks. I've been investing for almost 40 years, and I get that it can be scary. Stock market risk can be scary. I don't manage well for others. I just invest personally. I'm a bit of a nerd around it, and I like to talk about it and write about it here. So I understand all this. This is from a place of experience. It's not from a place of preaching and a lot of financial lingo and all that. It's just what I sort of know and like to talk about and do. So in this video, what we're going to do is take that next step. And you've already, let me back up just a little bit. I won't go into a lot of detail because you can watch the other videos in this series to complete these other fields. But we started out with your net worth, okay? And then from that, the total, you calculated the total that you have in stocks now so that you can know about how much exposure you have to the stock market. And then we talked about how much you could estimate the stock market will drop in the next bear market. I get it. Nobody knows, right? Again, nobody knows. All we can do is look at history and use that as a guide, and that gives us estimates, okay? Estimates, the closest word I like with that for investing is probability. We have to use probabilities with investing because we don't know what's going to happen in the future. That's what all the future calculators are based on. We can't know for sure. All we can do is look at history, data, use math, and use those facts to guide us forward to make estimates, our best guesstimates, I like to call them. So that's what you're doing in step number 3. I've got a lot of detail about that in the video about what bear markets have done in the past, okay? And remember, I don't want this all to be about bear markets. They go up a lot too, and that's what we like about stocks and why they often work to build wealth. And then the next thing we talked about is other assets, how some assets go up when stocks go down, like U.S. Treasury bonds almost always go up when stocks go down. I've written a lot about that at retirecertain.com lately. Gold and oil are typically associated with going up when we have bear markets. They don't always do that, but they usually do. I've got a lot of facts about that. I like facts at Retire Certain, my blog. And then what we're doing now is we're deducting the stock drop factor that you came up with. Now, I call it the stock drop factor because that's sort of that estimate that you came up with, whether it's 30% or 50% that you want to use where you think the stock market will drop next time we have a bear market, right? So you're just going to deduct that. You're going to take the total that you have with your stock investments up here, and you're going to take your stock drop factor, and then you're going to consider any other assets. And we talked about that. This because everybody's different that's watching this video. I can't give you an exact formula about this. I do work a little bit with coaching clients on this, but consider other assets. If you have things that are going to stay even or go up when stocks go down, you can adjust that here. I left it blank because I told you why I left it blank in the last video. So watch that. I'm not putting a field in here for that. And there's a reason for that. And then, so what you're doing, you can though, if you want to. And that what you're doing is taking the total you have in stocks times how much you think stocks will drop the next bear market. It's just real basic, based on history, And then you're going to deduct that. You're going to put that number right here and deduct that from your net worth. That number up here. And then that gives you about how much your net worth will be, how much you can sort of expect based on history, how much affect the next bear market. And that gives you about how much you think your net worth will be affected by the next bear market. Again, there's no way we can know for sure. If this feels loose and confusing, it's because we like exact numbers, but we just don't have that. All we have, though, that's really important and very, very valuable is we have what's happened in the past, and we have where you are now. And when we take those two facts and combine them, then we have a really, really good foundation for making decisions for now and for our future. And we can do that from a place of empowerment and peace and knowledge. And that feels really good. That feels way better than not knowing, because we just don't know. And we hear and read all the scary things, right? And it's vague. And that vagueness is just what's so scary, right? So yeah, that's what you're going to do with the challenge at this point. Now, you've got a really, really good estimate for about how much your net worth will be affected by the next bear market, right? And you can do this as often as you like. I mean, don't do it every day, but you could do it once a quarter, right? Or you could do it once or twice a year. And I recommend that because it allows you to feel more in control. It forces you to look at your net worth, to see how much progress you're making with your net worth. It forces you to look at your investments to make sure they're safe. It forces you to see if you have some assets that will go up or at least stay even when the stock market drops. It forces you to look at what the stock market has done recently and the upcoming potential for being invested in stocks, so that you don't miss opportunities from not being invested in stocks because you're so worried about it, because you're so uncertain about it. It feels so scary, right? And so I do suggest doing this once or twice a year so that you are, feel more empowered and you're coming from a place of knowledge. Now, that's what I want to share with you. If you don't have the handout yet, you can still grab it. I'll leave it up for a while after I do this series, this challenge. And it's at retirecertain.com/choice. Make sure you subscribe to my channel if you like this information. And watch the other videos in this series so you can complete the entire challenge series. And I appreciate your watching. Thanks.